G'day there guys, I want to thank Arona for asking another question on my wall, and she really has, well, 3 questions here. The first question is, what is a fringe benefit? Why do we have fringe benefits tax? And who has to pay fringe benefits tax? Arona, I want you to understand that this is one of the most frustrating pieces of tax law, and you might tell me, well, all tax law is kind of frustrating. No, this is one of the worst. Alright, what is a fringe benefit? Now, you can read the definitions of fringe benefits in your textbook, but basically it goes like this. Whenever you have an employer who pays an employee, anything or any benefit or any good thing that flows from the employer to the employee is going to be a benefit. It's so wide, it includes the desk you sit at, it includes having toilet facilities at work, any good thing at all that flows from the employer to the employee whatsoever. But it's the negative limbs that take away from this and start to narrow down what the government really meant by a fringe benefit. So any wages that flow from the employer to the employee, the employees will pay income tax on that, so the government doesn't need to chase you there because they've already got you. There's also the otherwise deductible rule. This basically says that if the employee had to pay for that expense and they would get a deduction for it, then it won't be covered by fringe benefits tax. Now, you can read a lot about the confusing formula, and fringe benefits tax is written in such a way that it's just mind-bogglingly frustrating to read. But in reality, when you do fringe benefits taxes in the workplace, you'll find it's actually pretty mechanical and fairly straightforward. Yeah, but the legislation, that's not so much fun. So to understand what a fringe benefit is, I think your second question is really hitting upon the mark, and that's the sort of thing that isn't explained very well in much of the textbooks. Why do we have fringe benefits tax in the first place? I mean, why couldn't we just grab it under income taxes? And indeed, in most countries, like in England, they actually do grab it under income taxes. They don't have a need for fringe benefits taxes at all. So let me tell you this in the form of story time. Thank you to my 3-year-old daughter for loaning me her little Duplo figures, I guess. So we have our employer and we have our star employee, and she's doing fantastic. She deserves a bonus. She deserves a raise. So the employer decides to reach inside the pocket, pull out $100, 1, 2, 3, 4, 5, and hands this wonderful woman a $100 increase in wages. Now, you would think that she's happy about this, but she's going to pay tax on this. For simplicity, let's just call it 40% marginal rate. Of that $100, she's only going to keep $60, while the other $40 here, that's going to go to the government in forms of taxes. So it actually cost him $100 to give her $60 worth of income. And this is not super efficient from their perspective. So instead, what the employer says is, I'm not going to give you a $100 wage increase. Instead, what I'm going to do is I'm going to give you my corporate credit card, and you can use this corporate credit card to fill up your car the next time that you go to the petrol station. And make sure that you fill it up to $100 every single week. I'll make that available on the credit card, and I'll pay it off as a business expense. So from her perspective, this is fantastic, because she would be driving around in her car, and that's $100 worth of petrol every single week that she didn't have to buy. From her perspective, she gets $100 worth of value. From the employer's perspective, he thinks it's fantastic because he gets $100 worth of deduction as business expenses. Mind you, of course, if he was to pull the $100 out of his pocket and give it to her as wages, he would have paid $100 in wages and got a $100 deduction that way. So from his perspective, it doesn't really matter. He could pay $100 in wages and get deductions that way, or pull out the corporate credit card and give her $100 worth of petrol every single week. From his perspective, who cares? But from the employee's perspective, this is fantastic because she's just avoided $40 worth of taxes. This is the fringe benefit that the government was particularly worried about. Basically, it's a form of tax evasion. The employer provides a benefit. It's not a wage, and therefore it's not core to the job. It's provided in some non-wage, not money, something that slips under the table somehow. It could come in the form where the employer pays the kids' school fees for the employees. It could come in the form of an interest-free loan. Whatever it's going to be, it's not going to be wages. It's going to be in connection with their employment, and basically it was a way to skirt around paying income tax. Now, in countries like England, they looked at their circumstances and they said, well, you know, it doesn't really matter. If you pay this person in wages, We'll tax them on the wages. If you pay them in forms of petrol, then we'll just tax the value of the petrol. As far as the tax office was concerned, it was all income from the employee's perspective, and we'll tax it that way. But the Australian government decided to take a different tack. They said, well, there's literally millions of employees out there, but there's only a few tens of thousands, maybe 100,000 employers out there. It basically boils down to this. There's lots more of these taxpayers than those taxpayers, so it was efficient from the tax office to simply collect fewer tax returns and collect the same amount of income. So they decided to shift the burden of fringe benefits. Rather than being on the employee who would pay the tax, they made the employer pay the tax. So they try to draw the rules to draw up an equivalency between fringe benefits tax and marginal tax rates. Basically, it wouldn't matter whether you gave this woman $100 and she paid her own taxes, or if you gave a fringe benefit plus you paid the fringe benefits tax, it would basically end up being the same from the employer's perspective. And they made sure that the equivalency was at the highest marginal tax rate, which at the moment is 45% plus 2% for Medicare levy, so basically 47%. From the employer's perspective, it doesn't really matter. He could simply give her $100 and she could go and pay her own tax. Alternatively, he could give her $53 worth of benefit and he could pay $47 worth of FPT directly to the government. Either way, it's going to cost him $100. So the exact formulas and all the details you can find in your textbook. This is merely an overview as to why we have fringe benefits tax. So let's quickly recap. Number one, what is a fringe benefit? It's anything which the employer gives to the employee that's not wages or not something that they would have otherwise gotten a deduction for. Why would they do that in the first place? Because they're trying to avoid paying income tax from the employee's perspective. So we have this system called fringe benefits tax that hits up the employers and makes sure that they pay additional taxes on top of the benefits that they were providing to the employees. If you do the mathematics and you take account of GST, you'll find it doesn't really matter whether they pay the employee in cash or they pay the fringe benefit. It will work out the same. But there's one proviso here. That proviso is assuming that she is already on the top marginal tax bracket. Fringe benefits tax is insane. If you're an employer and you're paying fringe benefits taxes for employees who are on 19%, you're crazy, because fringe benefits tax is hitting people at the highest marginal rate. So it's going to be much cheaper just to give the $100 to that low wage employee and they'll pay $19. Big deal, it's not a large amount of tax. But if you have a high-flying executive who is already on the highest marginal tax bracket because they're earning over $180,000, then it doesn't really matter, because they would pay that high marginal tax rate whether they got the fringe benefit or not. So you'll generally find in Australia it's not the low-wage individuals who will be receiving fringe benefits. Basically, anybody who's still receiving fringe benefits in Australia are pretty much at the executive level anyway. Thanks very much, Arona, for this question. I hope it at least made the ideas clear. I'm sorry I haven't walked through all the exact details of FBT, but of course you have your own textbook, and what I'm trying to do here is give you an overview of the stuff that was missing in your textbooks, and that is primarily, why do we even have these laws in the first place? I personally hate fringe benefits taxes. I think the government has done an extremely bad job of drafting these laws, and I think the textbook writers have done an extremely bad job of explaining why we had these laws in the first place. That being said, I think that fringe benefits tax is necessary, and if I was King of Australia, I wouldn't get rid of FBT. I would just reword it so it's a little bit easier to understand. Thanks very much, Arona. I hope you do well in your exams. Happy studies, guys.